Welcome to Looking at the Markets with David Modell. Today I'm going to give you a very brief introduction to Max Payne. So here we go. If you are familiar with options and you feel that large institutions are manipulating stock prices, then you might consider taking advantage of the Max Payne theory. The Max Payne theory claims that as option expiration approaches, stock prices will tend to get pushed toward the price at which the greatest number of options, in terms of dollar value, will expire worthless. In other words, the theory holds that when expiration approaches, stock prices will gravitate toward the price that will cause both call and put buyers the most pain, since their options would expire worthless at that Max Payne price. Thus, Max Payne is the price at which option holders would lose the most money, and option writers, or sellers, would profit the most. This is generally going to be the strike price with the greatest number of open contracts. Max Payne is only a theory, and can't be relied on to work all of the time. However, the Max Payne theory is supported by the fact that there are very large institutional option sellers who may have the ability to manipulate stock prices. Thus, it is possible that they will push a stock price toward the Max Payne point, so that their option writing trades will benefit the most. When expiration is near and a stock price gravitates toward the Max Payne price, some people will say that it is being pegged or pinned. It is difficult to prove whether Max Payne pinning is real or coincidental, but stock and option traders can still benefit from being aware of Max Payne, especially when the option expiration dates are near. So this example is from maximum-payne.com, and it shows the Max Payne for MU, which is Micron stock, as being $27. And that's not necessarily the price right now. This is just when they made the chart. All right. So here are all the puts in red, all of the calls in green, and right here, where the most options would expire worthless, both calls and puts, upon expiration. And by the way, expiration is usually, it's going to be a Friday, although for SPY sometimes it's a Wednesday. But we're usually referring to 4 o'clock p.m. Eastern Time on Friday is when expiration generally occurs. And this effect, the Max Payne effect, might be even more powerful for monthly expirations as opposed to only the weeklies. Okay, so as we can see here, according to this website, the Max Payne would be $27, the strike price of $27, where the greatest number of calls and puts in terms of dollar value would expire worthless. Here's another example from maximum-payne.com, showing the Max Payne for Apple as being $157.50 for the strike price for this expiration cycle for options. All right about there. All right, you've got the puts in red, the calls in green, and right there, that's the Max Payne. There's really no need to calculate Max Payne yourself. I suppose you could do it, but since there are websites and apps, that will do it for you. All right, now for apps, you could probably go to Google Play or Apple, the App Store, wherever you like, and you could do a search for that, for a Max Payne calculator. I know of a couple websites where they will calculate it for free right now, at least. I cannot guarantee it'll be free in the future, but as of this video, one is MaximumPayne.com. There's a website here, and also Optionistics.com. All right, so you can type these web addresses into your browser, or just type Max Payne calculator into a search engine, and you'll probably get there one way or another. If you want to test the theory out, and please be careful with this, all right? Yeah, this is something you should not do with large amounts of money. It's best to paper trade any theory first, all right? So do not put a lot of money into this if you're going to test it out, or if you're going to do it at all. In fact, you're better off really paper trading it with just play money, fake money at first. You can make but if you want to do this, you can make a directional bet with small amounts of stocks or options. The idea is to bet that the stock price, when there is only a short time left until option expiration, will tend to move toward the max payne price. Some traders will swear by this method, but you will want to do your own research before trying anything out for yourself. So the next time you see the price of a stock magically or magnetically moving toward a round number in the final hour before option expiration, just remember the words max payne. I hope this was helpful for you and informative. Please give this video a thumbs up on YouTube, and please leave comments. And if you haven't done this already, then please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you already subscribed, thank you so much. I really appreciate it. And if you have questions about trading, investing, stocks, options, or anything relating to these things, you can email me at any time. My email address is davidmodell@gmail.com. Thank you so much for watching and listening, and I'll talk to you again soon.